Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about Wall Street buying up all the homes, unseasonably strong housing demand, and what the new home sales numbers actually mean. As always, I want to thank our sponsor, Optimal Blue, for making this episode possible. Logan, welcome back to the podcast.
It is wonderful to be here. It is Wednesday morning before Thanksgiving weekend or holiday. So I just want to say happy Thanksgiving for everyone, even though this will be after Thanksgiving has happened.
It's true, but this will publish the Monday after. So I feel like we'll still be on the Thanksgiving, bandwagon on Monday. We have a lot of really interesting things to talk about. Wow. Stuff's happening all the time. Okay, let's start with BlackRock. Our favorite, what would we say, red herring that people like to put up about why there are no homes to buy.
Well, I thought after last year writing that article about why Wall Street didn't buy 44% of the homes, because I always say that we went peak Wall Street bat crazy in December 10th of 2023 when a viral video went out that 44% of all the homes in 2023 were bought by Wall Street. So the BlackRock thing is a lie. Okay, you've been manipulated. Any of you that are listening to this that actually fell for that, they lied to you on purpose because they think that you don't read. Okay, so how I'm going to explain this is how I've dealt with the Russian trolls, the Chinese trolls, Iranians, gold bugs, anti-central bank, MMT people who fabricate stuff all the time for whatever ideological they're trying to push on you. BlackRock bought 0 homes. So this is how I handle these people throughout the year. I have a pie chart. Some of you have seen this pie chart. The first thing you tell them that, and this is what I do, I just retweet people. I go, excuse me, it's not BlackRock, it's Blackstone. So first of all, you don't even know it's the right company. I could get it, Blackstone, BlackRock, the Rock, the Stone Cold Steve Austin, whatever. Some people think of it as the same thing. It's BlackRock. No, it's Blackstone. So I show the chart and say, no, it's actually Blackstone that actually purchases home. BlackRock actually came out with a marketing thing, paper once. We're not Blackstone. We don't own any homes or whatever. So when I do that, right away, the people that actually try to engage me back say, okay, well, it's the companies they own. So within 7 seconds, it's been debunked by the people that say it, that actually talk back. Okay, so they'll admit that, okay, it isn't BlackRock buying the homes, but they own companies, Invitation Homes or whatever, and so they're buying. So I go, okay, all right, that company is like less than like 0.5% of all the homes in America that they purchase. And then they go, well, no, they own all the builder stocks or they own this. So this has been a fabricated lie for a long time because why? Wall Street is a very good villain. Doesn't matter if it's the extreme left or the extreme right. But the whole BlackRock thing is amusing to me because now they go from, okay, so they don't buy the homes, but they own the companies that do buy the homes. Okay, so they don't own a lot of homes, but still they facilitate the buying of homes through non-30-year fixed mortgages, and the American person doesn't have a chance to go against BlackRock. I go, homie, you just said they don't buy any homes. What are you talking about? So this is all a fabricated lie because I've always said, if you look at the history of human civilization going back 2,000 years, the people that don't read are at a disadvantage against people that do read and try to manipulate them with data. And I go back to, let's say, 2011 to 2017. This actually started back then where people say these big Wall Street firms or pension funds are buying all the homes. So we have a stat on this from 2011 to 2017, $36 billion were spent by these firms. And I'm like, oh my God, people go, 36 billion, that's a lot. I go, yeah, that amounted to 200,000 homes during a period of time where almost more than 35 million homes were purchased. So take your calculator, everyone. You take 200,000 versus 35 million. Do the percentages. It's not very big. So here we are this year. Again, everyone's BlackRock, but it's already been debunked to the point to where it's now the financing of homes that they don't buy. But, they don't do 30-year mortgages. They do short-term. And I was like, okay, guys, they don't buy any homes. What are you talking about financing for? So hopefully all of you now are actually versed with doing this. Take my pie chart. And whenever somebody says BlackRock buys all the homes, you just simply reply, no, it's Blackstone, and they don't own a lot of homes. The institutional buyers went from 0.4% pre-start of COVID to about 2.4 to 2.5 for 2 quarters, and they're back down. Mom and pop investors own most of the real estate out here, but you can't make them a villain, because a lot of people who actually say that about BlackRock actually own investment properties too. So they would be the villain, not BlackRock.
No, so this is what you always bring up, is that yes, there are investors that are competing with home buyers for homes, right? Like, I mean, there is limited inventory. There are investors. They are, generally speaking, smaller shops, mom and pop, probably a lot of our audience, right? A lot of our audiences are also, they have more than one home. They might invest in real estate in different ways. Those are the people who are doing it. And you can say, yeah, okay, I have more competition, but nobody wants to make those guys the bad guys, the way that it's easy to say, oh, Wall Street, and everybody gets up in arms. Like, it's the one thing we can all agree on. Like, yes, we can make Wall Street the bad guy, right?
You know what's interesting, Sarah, is that this all first started when I used to fight the extreme bullish housing people that say home sales can never go down because Wall Street will buy all the homes. I go, no. Housing demand is run by mortgage demand. Mortgage demand is primarily primary resident home buyers. The Wall Street simply is not a big enough buyer to offshoot the gap. If mortgage rates fell, demand has never shown itself. Or if mortgage rates rise, demand has never shown itself to sustain at a very high level. Clearly, 2022 showed that to be the case. So, this year was really noticeable how the shift from, okay, maybe BlackRock doesn't buy any homes, but they own the companies that do, from, okay, maybe the financing of BlackRock allows them to have an advantage over. Remember, it's all class warfare. The Russian trolls have, when I used to deal with them, that was their main thing: class warfare, manipulate people on Facebook and other places. Here it is. It's just that reality here. So hopefully now, all of you can realize this was all a fabricated lie to manipulate you. It's like the Matrix. You're still in the Matrix. You're not unplugged yet.
That is hilarious. Okay, good thing to note. And then let's talk about some of the surprising things coming up that maybe didn't surprise you, like purchase apps this week.
Wow. So everyone woke up to a headline that said 52% year-over-year growth in purchase application data and 12% week to week. So again, how we track housing, current and forward-looking model. So what have we been stressing for a long time? The pending contract data looks much better now than the last 2 years. On this Wednesday morning, pending home sales came out and had another positive print. But what's occurred here is that this is the first time that we have now had 25 weeks of a positive demand curve, meaning that there's more positive prints. And I'd assumed that when mortgage rates went up, that all the weekly data, most of them would be negative. And we wrote about that in the tracker the previous week. This week, we were positive 12% week to week. That's what I care more, the week to week on this stuff. Forget the year over year comp should be completely ignored because it was running off of the holiday. So all Sarah, what do we say? All holiday purchase application data, just ignore. It doesn't matter if it's positive or negative. It's completely useless. But now, 7 weeks with higher rates, 4 positive, 3 negatives. That, Sarah Wheeler, has never happened in the last few years. We've never had a positive forward-looking weekly data on purchase apps with a positive pending contracts. This is the first time since rates have risen since 2022. So remember, what do we always say? It's an extremely low bar. It doesn't take much to move the needle, but it's really hard for home sales to crash below 4 million. We've now tested this 2022, 2023, and now 2024. Higher home prices, higher rates, everything. We still hover around here, but if you get any kind of firm base setup, every year wages rise, every year households come. Imagine if mortgage rates were at 6%.
Whew.
For the entire year, you're growing sales. That means every home sales are going to crash down or whatever theory goes out the door. And that would be for 2025. Because now we have a lot more choices than we did in the summer or the March or spring of 2022. So the housing market is more healthy now. It just needs lower rates, and then you could have a sustained positive demand curve in there. And I just think it's that the pending contracts data that we have that not a lot of people have, our weekly stuff have been showing this for some time, and we're like, this looks different than what we've seen before. And now the purchase application is holding up better. The question is this the seasonal push that we've seen, starting November and December? And that just means that they're just simply the raw size of people coming in just overwhelms the data working from a very low base. This is why I always stress it's the third calendar year of the lowest home sales ever. It doesn't take much to move the needle. If that's the case, then it's just a seasonal demand push. But if you get rates lower, it could sustain the growth like we've seen.
Let's talk about seasonal demand push because, that has been true in the last couple years. But traditionally, is there a seasonal demand push in November?
Well, no, but, here it is, this 5-year period now. Okay, so 2020, the late demand push was the COVID-19 makeup demand.
Right.
Okay, so we had a big surge in demand toward the end of the year because we had a period of time where people weren't doing anything. Then 2021 was very abnormal. We actually had, for the first time that I've seen, a volume curve increase toward the end of the year, which never happens because purchase application data is very seasonal. It was a very stable data line. COVID ruined a lot of things. It ruined this data line. Second week of January to the first week of May. After May, total volumes always fall. It's a very steady, just like our pending contracts data. You could kind of see the seasonality of housing. However, 2021 rates were lower. Volume picked up. That was actually the start of the savage healthy housing market. We actually wrote that article in October. I was like, guys, this is not a really good setup. If apps grow into this, then that seasonal, and 2022 was terrible because we're going to have another 17 to 19% home price growth here. But then at the end of 2022, rates fell. That was the whole stabilization of the housing data happened on November 9th, 2022. So rates fell. Okay, makes sense. Rates fall, demand is low. There we go. 2023 then, rates went from 8% down to 6.6. We had a very mild but a demand curve increase. Okay, that's just rates falling. But here, Sarah, this started in June. Right, our pending contracts were starting to improve months before the recent existing home sales and pending home sales. So the base is firmer; it's acting better. You put lower mortgage rates into that, and I hate the theory pent up demand, but we're at such depressed levels, and we are missing human beings that usually would buy. That, boy, if you just get a little bit, you can grow sales. And you could grow sales with a much more healthier housing market because there's more choices. We don't have to worry about, 75 people to a house or anything like that. That's as good as you can ask for considering the chaos that we've had for the last 5 years.
Well, and your point has always been over the last couple of years, as mortgage rates get down towards 6%, demand increases. We know that because the builders can pay down rates so that's where people are comfortable buying and they move houses. We've seen that in just the existing homes as well. But right now we're not near 6%. We are not near 6%. In fact, it's much closer to 7%, a little bit over 7%.
The builders, the whole new home sales situation is, it's interesting. We had this theory about how the builders operate. And I've kind of said, listen, guys, if you go look at housing data since the 1960s, the builders have always operated the same way. They don't oversupply a market. They only supply what they think the demand curve is. Now, there could be some spec building coming in at times, but it looks flawlessly, permit sales, it dances like the slow dance with the 30-year mortgage and 10-year yield. Permits and single-family permits and new home sales move fluidly like that. So we had the recent new home sales report. Huge miss, like a waterfall dive miss. And whenever I see a waterfall dive or a vertical move, I always think something weird happened. It tends to get revised, but you could actually see rates were rising, but then you had the hurricanes. If you take the southern states away, you had 8% year-over-year growth. The month-to-month data was positive. Almost all the inventory growth is coming from the South. Now, the South is also getting hit harder with higher mortgage rates, Texas and Florida in particular. So you could put a bunch of variables into one, but that waterfall dive was probably not a legit thing because of the hurricanes. And you take out the South data, it looks pretty normal. But then when you look at the new home sales purchase application data, which is different, guys, the Mortgage Banking Association has their own purchase application data. It only comes out once a month, but it's clearly well above the 2022 level. So you have stress in the southern areas of America. You're probably not going to get much construction going on there in the future. But as a total, it was okay. It's nothing spectacular. The builders can move products because they can buy rates down. Housing permits and starts are at recessionary levels. We've talked about this for some time. They will not oversupply a market. Why, Sarah Wheeler?
Because they're not the March of Dimes. They're not a charity.
They are not a charity. They're here to make money, and the corporate profit margins are still very healthy for the builders. And in that context, they got some wiggle room to move. But definitely in the South, it's going to be more problematic for them.
I think it was interesting because, of course, the first headlines after the new home sales report came off, and our headline was like, fell off a cliff, which is true. That's what the data shows. And then you wrote the analysis piece that was like, did it really? Because it's like if you factor in some of these variables, really, actually, it grew in some ways. If you take out the South, correct?
Not the South, but whenever you have a hurricane, basically nothing goes on. Okay, so that's just you have no normal kind of economic output in terms of people consuming goods and services in any normal fashion. Then on top of that, rates actually rose. That was even if the hurricane didn't happen, the South was going to get hit anyway. The way that the sales just made a waterfall dive, that was hurricane and rate related. So a little bit of context, but I think when people read that analysis, they go, whoa, if you take the South out, we actually had year-over-year growth. So the purchase application for new homes is still kind of elevated from the 2022 levels. If we were crashing below the 2022 levels, that's a whole different story, man. We are laying off people left and right. That hasn't occurred, and that's why employment is still there, right? It's one of these things where everyone in the country is now looking at this because the units under construction is still coming down, down, down. At some point, when those units are completed, do you really need that labor? We're trying to meticulate a very small thread, threading in the needle on this. At what point do they start laying off people? Again, 6% mortgage rates gives you more production of housing. It is a monetary policy choice to have an anti-growth housing policy right now. So we've pushed the gambit as much as we can before layoffs, but we can start to connect the dots here on, hey, listen, after this, there's no permitting work for this area. So the southern states would actually be the first areas where you start to see construction layoff if this continues out here. But again, the 10-year yield just between 380 and 4.25 with better spreads. If it goes down, you get 6%. The builders have always operated better. And now we've had 3 different times in the last 2 years to show us this.
Okay, so one clarification on that, Logan, because you say, the southern states get hit harder by higher mortgage rates. And, in your analysis piece, you explained that because I was like, why? And you're like, because they're already paying more in property taxes and in insurance costs, correct? So it coming in with higher rates just makes that even harder.
Well, if you look at what we call as the total PITI cost of housing, property taxes, insurance, everything, home prices escalated in the South, then rates went up. Then those states they don't have state income taxes, so they have to collect property taxes. So then you get hit with another layer of housing inflation. Then on top of that, you have the insurance issue. I would say it's more of a Florida thing than Texas. But then these states need migration, right? Texas needs California money, and Florida needs migration from the East Coast. So when you put all those variables together, inventory, like what we say, like 40% of the inventory growth is Texas and Florida this year. If you take them out of the equation, okay, the inventory data will look worse. However, there on the construction side, existing homes are just cheaper than new homes. New homes have all the bells and whistles, but they could provide a lower rate. It's harder to get very bullish on construction if you have an area where there's more active inventory. especially with rates are up. And that's where, it becomes more problematic because so much of the growth was in the South for the builders. And we put that chart in there for everybody to visually see when we break down the new home sales numbers. We actually put where the home buying is. So it's not conducive for construction. Now, remember, we don't produce zero housing starts ever, right? Even during the great financial crisis and the housing bubble years, we still had 200,000-300,000 new homes being bought. So we never go to zero, but you could see the slowdown that we're having with housing starts. And the South is an area of concern for that going out in the future. But again, if rates go lower, just 6%, the builders can offer lower rates. They can move products. They have enough corporate profit margins to do this. It's workable, but definitely a different story in the South and versus other parts of the U.S.
So, Logan, I'm going to ask you again. This is something that we come back to maybe once a week because it just keeps popping up that Trump seems to be moving forward even before he is officially president to put into place some of those mass deportation things. I know here in Texas, they've offered him some land down by the border. It seems like things are moving forward. You've been skeptical of that, of whether that would really happen above and beyond what normally happens with deportation. But it is something NPR reported that home builders are starting to worry. We're doing a story on Texas home builders in particular. Do they feel like their production is going to be impacted? So what are your current thoughts on, if we have a bunch of construction workers who may be here illegally deported, what does that do?
So President Biden actually deported more people than Trump did during his presidency. So I understand the concern from the home builder side. There are rules to how to come into this country. And then there's people that are immigrants like me that actually go through a whole process. So, and then we become American citizens. So I think the fight is that illegal immigrants need to be checked. This is also a business decision because a lot of business people do hire illegal immigrants for decades and decades. That's what we do in this country. So I think the concern is there going to be a mass deportation that's above the normal trend? And in that context, what areas of the country, what sectors actually get hit disproportionately? So if the home builders are concerned, again, I would say, let's wait till something happens, because if I put Biden's deportation stats versus Trump's, right, it looks a lot more. Even President Obama had a elevated deportation data line. So let's wait to see, and then we could actually confirm this. But to my knowledge, I've never seen any kind of mass deportation program being effectively put into this country outside the normal curve. And there's data on this. You could go back 3 or 4 decades. If that occurs, then we could actually go into the process about, labor inflation, what parts of the area is going to get hit harder. Is the South going to be disproportionately hit? So if mortgage rates do go down and all of a sudden we just don't have enough workers, that is a legitimate claim when it gets there. I just think I've seen so many presidential cycles and economic cycles, and it tends to there tends to be a lot of hype, and it just never becomes what a lot of people think. So I'm just going to wait until I actually see it occur, and then I could actually run a model on it. But I think a lot of people were surprised when they saw that Biden actually deported more people than Trump did, and there were workers there. So I understand the concern from the Texas home builders. I understand the concern from Florida home builders, but let's kind of wait and see, because when you discuss political economic theory, everyone gets into the frantic stage, and then all of a sudden things end up working to a degree. So be patient on that, and then we'll work off of what happens in real life. Because if anybody would have said Biden would have deported more people than Trump, nobody would have believed it. And then you look at the data and you're like, whoa. So, and the builders were still functioning, in terms of finding labor.
Okay, going into Thanksgiving weekend, I know this will come out on Monday. Anything else you're looking at from an economic standpoint?
Well, just to see, of course, Thanksgiving week, we do the tracker, but it's Thanksgiving week. Not a lot of people do this. We want to keep an eye on, let's see how black sales do, retail sales, how the economic cycle works. The 10-year yield right now for everybody, love the Instagram family. It was like 4.26 last time I saw. For now, that second level 5% test of the long-term downtrend, it actually held out there. So that's encouraging to see. And also the City Economic Surprise Index is fading a little bit as well. So some positive things. I just want to see how the rest of the year for purchase apps do, because if this is just a seasonal demand push here, then we have to treat it as such. And then we kind of wait and get ready for 2025. You and I are going to do a 2025 forecast podcast. And I'm very meticulous with kind of how I work the data lines.
Yes, you are. Well, I hope you have a great Thanksgiving. Listeners, I hope you guys have a great Thanksgiving. Great time over the weekend to catch up on any episodes you missed. But Logan, thank you so much for being here.
Pleasure.